Tracy Hanbury, one of the directors at the National Landlord Investment Show. I'm absolutely delighted to deliver our third edition of Landlord Investor Hour. Welcome to Landlord Investor Hour, and I'm really, really pleased to say that we have our guest today is Liam Rogan from Get Ground. So delighted to have Get Ground with us. We're going to go through all the unique points of how Get Ground can help UK landlords, sort of small portfolios to large portfolios, and what their services can do to help you. So I'll now introduce you to Liam. So welcome, Liam, to the next edition of Landlord Investor Hour.
Thank you very much, Tracy. Pleasure to be here. Thank you very much
for the invite. No problem. I think obviously what would be really good to start with, Liam, is to find out exactly what Get Ground do. So I know you guys were established around sort of 2018. So I think over to you now, really, if you can kind of give us a bit of a brief sort of update, insight of what your services are, how you can help UK landlords, and we'd love to hear about it.
Brilliant. No, so essentially, we're specialists in everything limited company. So everything from the education around limited companies, helping people figure out kind of where the benefits lie, if they pertain to them, etc., to the structuring of those companies, and so making sure they're as tax efficient as possible and everything like that, and then the ongoing management of that. So we're specialists in everything limited company, and what we've tried to create is essentially a service that encompasses all of that. And so I think it's probably best to imagine what we do in two parts. So the first element of what we do is purely educational. It's helping people take a deep dive into the world of limited companies and how they pertain to property investing. So limited companies have obviously been a very hot topic in property for the last sort of 5 or 6 years. They've been used extensively before that, but it's really been the last 5 or 6 years where they've really taken off. And even though lots of people are taking that route, a lot of people are still very confused. They want to know a lot more of the detail there. They're very confused by a lot of the tax jargon and which rules apply to them and everything else like that. And so our first kind of port of call is to be an educational resource for investors to help them understand where the benefits to company ownership lie, if they pertain to them, how to access those, how extensive they can be, and how they pertain to their future plans in property, so their actual strategy of property. And then once people have decided whether they want to go down that route or not, what we aim to be is their support service essentially for that. So what we've created is basically a turnkey solution to those taking the buy-to-let limited company route. And so that is everything from the setup and the structuring of that company. So we've created a platform where we can do that very, very efficiently. And we will structure the company in a very high caliber way. So a lot of people, when you talk about setting up companies, will think, I'll just go to company's house and I'll set them up there. I'll set a generic company up on company's house, but generic setup gets generic results, essentially. And so what we've done is we've dedicated an awful lot of time and energy to create companies that are basically purposely built for buy-to-let purposes. So everything from the shareholders agreements, the directors loan agreements, the articles of association are all structured in line with maximizing your returns on a buy-to-let investment. And so after the structuring, we also coordinate with all other parties involved with the investment. So that's everything from the brokers, the agents involved, the solicitors, to make sure everything's lined up, and so that the actual investor themselves doesn't have to do lots of chasing around and figuring everything out. And then beyond that, we open up the company's bank account. Now, this historically is a particular issue, especially for those based overseas, but it's still not an easy thing to do here. So obviously, if you're running a limited company, a property business in the UK, your lender will require you to have a business account. And these can be very, very difficult to get hold of, doubly so for international investors. And we've created a very unique way in which we can open one of those automatically for all investors on the platform. And then beyond that, we look after everything. So we take care of all the financial administration associated with company ownership. And so that's everything from the accountancy, providing the registered office, providing the business account, corporate tax returns, annual financial statements, everything else like that. So basically trying to encapsulate everything under one roof. And then as a final point, we have basically our additional services. So we have our own mortgage partners. We have exclusive deals with mortgage lenders for limited company financing, property management, everything like that. And so trying to really simplify the limited company route, make it really, really cost effective and simple. Bring it all under one roof, and allow people to take it in the most simple and easy manner possible.
Okay, fantastic. So really what I'm sort of taking from that is all the headache to set up a company with all the different areas that you need, your accountancy, your corporation, your tax, your registered office. You can take all of that headache away and set that up. That's pretty much, that is it.
So bring it all under one roof and just make it really simple and cost effective.
Okay, brilliant. Okay, lovely. So my next sort of question really for you is, who are Get Ground supported by, and how are you funded, really?
Yeah, we're first and foremost a property technology startup, and our aim is to make the property industry a lot more efficient and allow people to do things better, essentially. And we've had the good fortune to have an awful lot of support in this. So as you said, we're relatively young. We're about 3 years old or so, but since our inception, we've had an awful lot of support from a variety of areas. And so we've had the good fortune to be backed by the UK government through HM Registry. So we've been partially funded, but through something called the Geovation program through there. But we also have a lot of private backers as well. So we have a lot of private equity and venture capital firms interested in us as well. And so we have had some rounds of funding from the likes of Mosaic Ventures, Hambro Perks. Our most recent round of funding, which I think was sort of January of last year, was through QED Investors, which are a big American firm. And so we've really excelled in terms of funding, and it's allowed us to basically develop our services and our team from a very small number, which was about 6 when I joined, to I think we're over 60 something now. And we've got offices internationally. So we've got one obviously in West London, which is where I'm based out of, but we also have one in Hong Kong, we have one in Singapore. We're probably looking to grow that soon as well. And so, we've had a good fortune of being supported by both the government and private backers as well. And then more recently, we started doing work with the likes of the National Residential Landlords Association. So we work very closely with those guys. And so we'd like to think we're very well supported and well capitalized, and that people have an interest in seeing us succeed and growing. And since I can't remember what it was when I joined, but we had very few clients. And now I think we have over 5,000 investors on the platform right now in just the space of a couple of years. And
would you say that's kind of UK investors?
It's a real mix. So I think at the start it was there was a much bigger proportion was internationally based, more so due to how real estate works out there and kind of connections. But as our marketing's grown and as our partnerships with UK-based firms have grown, I would say we're probably maybe 70-30 UK to international at the moment. So it's very much shifted towards the UK side of things, which is brilliant because that is our core market and something we're trying to get more and more in front of.
Yeah, fantastic. I mean, one of the sort of questions really, sort of based on clients, I mean, from our kind of landlord audience, if you like, and our subscribers and our database, we've done sort of significant research, and sort of minimum is really kind of around average 5. 10 plus, and then whether the sky's the limit. What would you say, if it's somebody that's starting up with maybe one property, would Get Groundwork for them? And would that help them sort of start, or were you looking for more sort of plus properties?
It's a real mix, and that's I think one of the beauties of what we're doing is that it's really designed to pertain to everyone. So I think one of the kind of common misconceptions with the limited company route as a whole is that you need an extensive portfolio for it to be beneficial for you. That's not actually the case, and we've structured things and we've made things accessible in a way that from the first property onwards you can do that. So as much as it is beneficial for your portfolio landlords, of which we have many, we've got people on the platform with upwards of sort of 10, 15 properties. Yeah. And we've also got a lot of people with 1 or 2. Okay. And so I think one of the unique things we're doing is we're making the actual cost of taking that route very cheap. So in the past, I think a lot of people were put off by the associated cost of accountancy fees, bank accounts, tax advisors, everything else like that. And when you've got a small portfolio of maybe 1 or 2 properties, especially if they're sort of relatively low yielding, £1,500, £1,800 a year on those services is a huge chunk of your actual net yield. And so a lot of people would be put off by that, but because we've done things in a way where we can do things at scale and therefore cost effectively, we charge very cost effectively. And so we charge £20 per month to basically run all the financial administration of the company, so £20 excluding that. And so basically means from the first property onwards, it is affordable for investors to take that route.
That's fantastic. I mean, another question, sort of COVID, I mean, did you see a great increase? Obviously people had, diversified, they'd thought about other things. They, a lot of property obviously, was, very successful in this awful time. But did you see an increase of people coming in and getting in touch with you guys? COVID
was a really strange one because I think for businesses in general, I mean, COVID was something we haven't really seen before, and that, kind of a global pandemic affecting business and general life in the way it has. And we, as a startup, businesses can weather things. Startups, it's, you really can't afford to have any big issues in your first few years. And so we were very conscious of how it would affect us. And it actually affects us very well, essentially. And so what we kind of saw after the initial kind of March period where it was kind of slightly scary and, you know, things died down a bit, because people's sort of more traditional investments in stocks and shares and bonds and things like that were plummeting 20-30% over the course of a week. People were getting scared, essentially, and they wanted, you know, a much more safe and sort of bricks and mortar investment, which is what property offers. And, you know, no matter what happens to the economy or the world or anything else like that, the reality is people always need a roof over their heads. Yeah. And property doesn't lose value in that way. So whilst you might, you know, property might stagnate, as it seems to be a bit in London at the minute, you know, it's rare you're going to have a 20 or 30% loss over the course of a week, is the truth. And a lot of people are seeing that, especially overseas as well. People are thinking, I'm going to pull my money out or at least diversify my investments, stick as much of it in property as I can. And that was obviously very beneficial for us. So actually, after that kind of initial month, things really took off for us. And since then, it hasn't stopped. Essentially,
yeah.
it's
yeah, absolutely. I mean, that's good to hear. There's certainly, you know, I know sort of personally from friends and family and colleagues that I know that had to do exactly that and really rethink everything. Yeah. Okay, well that's great. I mean, the other thing, I mean, what'd be really quite good for our audience to understand is, can you give me an example of a case study, a typical client that you've got at the moment or someone that's come on board with you and how you've helped them?
Sure. Let me have a think. Probably one of the more recent ones I and a colleague of mine dealt with, basically a doctor based up in sort of Midlands way. And he's, what was he, so late 40s, early 50s, and had this big pot of cash and was looking to kind of get into, more into the property sector because he had 2 or 3 properties already, but they were bought pre-2015. He basically wanted to figure out, first of all, I want this for my retirement, but I also want to, before retirement, reduce my hours. So I think he was a consultant or something like that and had the ability to do that. And so wanted to both top up his actual income that he was living off and then have it as a retirement fund, but also create a portfolio that he could pass on to his children. He wanted to figure out the best ways to do that. And so we had a look at the situation and sort of gave him enough education to figure out what way to go there. And so in his situation, he's a high rate taxpayer, so earning over £50,000 a year. And so generally speaking, higher rate taxpayers and additional rate taxpayers are one of the most sort of attractive groups of people for the limited company route, given various tax regimes at the minute. And so from minimizing his kind of tax liability there, it was very much the right route for him, especially him wanting to live off it. So he wanted to pull the money out of the company, and something he was concerned about by the limited company route was, hang about, well, if I pull this out of the company, if I pay myself a salary from the company, I'm not going to hit with an extreme income tax. And we said, well, actually, you can take your property income from your company very tax efficiently. And you can do it through a number of means, all of which we structure for. So dividends being one of them, but direct to loan repayments being another, which is something that he wasn't aware of as being a very useful way of pulling that out. And then also topping up his pension pot. And so he wasn't aware that directors could actually pay into the pension pot, and you can minimize your corporate tax bill that way and use that money when you retire. And so he was very taken aback by that, but he was also very keen to basically pass properties on to his kids. So he basically wanted to buy 3 more properties. So he was going to basically pass 2 each onto his kids when he passed away. Unfortunately, we have the setup in which we can actually set each property up within its own SPV. And so what that basically allows him to do in the future is he can transfer the asset to his children, but he can basically gift a property via way of the company's shares across to his kids. Okay. And so potentially mitigate his inheritance tax, but also allow him to kind of split things up. So if he had them all in kind of the one corporate structure, which is what a lot of people would normally do, because they were in separate ones, he could give each one individually to an individual child that way. And so that's his plan for the future, essentially. He's been very keen to go ahead with us, and he's set up a couple of SPVs with us already. And so I think he's quite a good example of a client. So we deal with a lot of doctors, accountants, portfolio investors, everyone actually, to be fair, in the UK. The UK, overseas is very much a kind of different clientele type. But I think in the UK, it's really a mix of everyone. It really is. We do generally see your typical client is a higher rate taxpayer, so sort of £50,000 plus per year. But we've really seen everything. We've seen students get into it as well. And students are quite an interesting one because they don't really have, generally speaking, unless they're very fortunate, have a huge amount of capital to play around with. What they usually do have, though, is £5,000, £6,000, £7,000 that they can play around with. And so what a company structure is really unique for is that you can pool that together with your friends. So if 4 of you have that, you've now got £30,000 or whatever it might be, and you all have different ownership in that company, 25% shareholder, whatever it is. And it basically allows people to get on the property ladder a lot earlier and get into things a lot earlier, which is becoming harder and harder to do. And so corporate structure is very, very useful for that, and that's something we've been focusing on as well.
Fantastic. That sounds like a great case study. Another quick question before we get on to some taxing issues. So obviously, sourcing properties, do you work with companies that might help your clients source properties? So, again, that's sometimes the hardest thing, is to actually find that property, isn't it? And try and find it below market value. And people that are busy that might have that other job and working. So how would you help them?
Very much so. So right now, that in terms of who we work with, it's really quite an extensive network. So we don't, until relatively recently, we haven't actually really done any marketing. We're purely almost a referrals-based business. So what we've done over the past couple of years is gone off around the world and within the UK and partner up with mortgage brokers, developers, property agents, estate agents, even some accountants and things like that. And basically, they're clients who are interested in the limited company route. They are referred over for consultations with them and figure out kind of which route to take and how it pertains to them. And then we will obviously do all the settlement structuring and everything there. And so we work with currently everyone from the likes of Knight Frank in Hong Kong, Savills, the Berkeley Group, sort of global developers and things like that, down to 1 or 2 man operations. And so we work with a lot of new build developers in the UK, work with a lot of sourcing agents in the UK already. Typically speaking right now, most of our clientele, because of where they've originated from, so they have come from a broker or they've come from a property agent, say if they refer from Knight Frank or whoever it might be, they have the property in mind already. Okay. And so we will be that ancillary service for them and help them out and do everything there. But what we're doing a lot more of now is organic lead generation through marketing activities, and those people less so. And so what we will be looking to do in the future is bring on more and more partners who we can basically determine have really great stock or a really great service. And we will definitely look to sort of push people their way as well. Sort of, because the aim of the game is to essentially create a marketplace where we're giving people best access to everything, be that property, be that legals, be that property management, whatever it might be. So,
it's that whole turnkey solution,
exactly.
Isn't it?
Yeah,
so
try to bring it all under one.
No, fantastic. I mean, so obviously onto some sort of taxing issues now, which is obviously always a huge issue for landlords. It's ever changing, that whole landscape. So one of the sort of questions really that I've got for you is, why the increase of popularity of using a limited company structure now, Liam? I mean, what would you say there is that popularity there?
I think it's twofold. I think the first one being the obvious one, which is regulatory and policy change. So most people watching this, or even if they haven't watched this, young investors who are very new to it, even though this is Section 24 is the big one. So 2015, mortgage interest deductibility, basically. And so since 2015, there was a phasing out of the ability under your personal capacity to deduct the entirety of your mortgage interest from your tax bill. And that basically had a profound impact on the market and investors as a whole without being able to deduct that expense. And so some people ended up selling up shop completely. Some people just said, this just isn't profitable for us. But those who did want to stay in the game thought, hang about, we need to get work around this and figure out kind of what's the best way to kind of maintain the profitability of our investments. And companies are very useful for that, because the big difference between company ownership and private ownership is that under a company, you can deduct the entirety of your mortgage interest from your tax bill. And so that's been one of the key kind of tax efficiencies and pulls that has drawn people across. And generally speaking, it's become more expensive to become a landlord over the last couple of years, more SDLT and things like that. And so people looking for routes to sort of minimize that liability, and limited companies are extremely useful for that. And so I think that's been the first driver. But I think people's general education in general has become an awful lot better. And so, the internet is wonderful for this, but the likes of, your own company, the more seminars and educational events and property education companies there are that people go through, the more they're aware of these other structures that exist, companies, LLPs, whatever it might be, and where the benefits lie. And as education gets better, that information gets a lot more palatable. So I think in the past, it used to be sort of a bastion for people who were very wealthy and had really good accounts and stuff, and they would look after everything. But a lot of investors don't have that, and a lot of investors can't afford that. And as people's understanding of company structures has got better, people have realized where the benefits lie. And I think one of the core beliefs we have, and I think that people are starting to understand a lot more, is if you look at what a buy-to-let business is, a buy-to-let in itself is, it is a business. And it's a cash-generating, cash-flowing business. And companies are built for businesses. They're built to protect them. They're built to protect the assets within them and the shareholders. They're built to give them specific advantages that allow them to grow quicker and become more successful. And so it's a fairly natural marriage between the two anyway. And I think people have just cottoned onto that, essentially. And they thought, hang about, yeah, that's a very good point. It protects my liability. I get efficiencies that mean I can grow quicker and faster. I can, pass on to my children in a very useful way. And I can have a very flexible ownership structure with other people. And the more people who've realized that, and the more, if you go on YouTube now, there's some fantastic people on there at the moment doing really in-depth deep dives on it. We've started doing our own stuff as well. And they've really taken off in the last 5 or 6 years. And I think because of that, there's been this big push across. And I think last time I saw, just over 60% of buy-to-let purchases now are made in limited companies. So it's very much become the mainstream way that people are investing. And there are obviously kind of other structures that are a bit more complex that maybe, a couple of percent of the population use. But by and large, people are either buying in their personal name or buying in a company name.
Yeah, absolutely. So the next thing is really, what are the key considerations of how to set up a company?
So this is probably one of the biggest reasons we exist is that people in the past have been flying into company ownership. They say, okay, great. They get excited by naming their company. They're like, oh, I'll name it this and it's going to be amazing and all that. And they fly into it without giving it a lot of thought beforehand. And so if you think about what a company is, its inception, it's set up on Companies House. And so the starting point for a company is different. But if you think of Goldman Sachs and Costa Coffee, they're two very, very different companies. But their original starting point would have been companies like Goldman Sachs, probably in America, but the same principle. It starts at a central point where it's a company. It's the legal structuring after that determines what those companies become and what they can do and what activities they can engage in, what efficiencies they can get access to. Yeah. And that's the important and crucial point. And so a lot of people would just go on Companies House, set up their company, company or go on a company formation agent and do it that way. But as I said at the start, generic setup gets generic results. And so I think one of the biggest things people should be considering, and something we've put a lot of work and attention to, is how are you going to get your money out? So it's all good and well having it sit in the company and you've deducted your mortgage, interest and all your expenses and only paid corporation tax. And that's great. But how do you then get that money out of the company? And a lot of people at that point will go, I'll just pay myself salary. Salaries aren't very efficient. They're taxed to income tax rates. You have to pay national insurance contributions. You have to be PAYE registered, everything else like that. And then so people think, okay, well, I'll pull that all out via dividends. Well, dividends are great to a point, but if you're based in the UK, you only have a dividend tax-free allowance, and dividend tax can actually be very, very high. And so something that is super important to get in place is what's called a director's loan agreement or an owner loan agreement. It's basically a legal agreement we structure for our clients, which basically says, if we use you as an example, I, Tracy, am opening this company. I want my company to purchase this property. My company, as things stand, doesn't have any capital in it, doesn't have any money in it to buy this property. So I, Tracy, the director and owner of this company, I'm going to lend my company the money to buy this. Once you've lent that, the company can obviously buy the property, but that company, your company, now owes you that money back. And so you can then repay that capital back to yourself over time from rental profits without any further tax on those repayments because it's the repayment of debt. And so it's a really tax efficient way of getting your money out without being stung with extremely high taxes. And that's something that people often don't know about when we speak to them. Those who do know about it will often kind of make the faux pas of quite often applying a really high interest rate to that loan because they think it mitigates their corporation tax. And that's another thing that people don't quite understand because there's a number of areas to consider there, things like transfer pricing regulations and things like that. But essentially that interest is actually taxable at income tax rates rather than corporation tax rates. And so it can actually, generally speaking, be inefficient to do that. And so it's something we help people understand is whether or not an interest rate would be beneficial to their own loan. And by and large, it isn't. And so that's, I think, director loans are a really important one. But another really big one is shareholders agreements. And this is something people are blind to constantly. So they'll set up and nobody considers a shareholder agreement. And it's so important in ensuring the security of the assets within and your ownership in it. Because when you're owning with other people, be it family, be it friends, or be it with business partners, things happen. I know that's a very general statement, but things do happen. People fall out, COVID happens, global pandemics, global recessions, roofs cave in, tenants sue you, whatever it might be. And a shareholders agreement is super important in establishing kind of ownership rights and for all involved and what happens in the case of difficult situations, etc. It's something people pay very, very little attention to. Now, I think part of the reason they do is you can get a general shareholders agreement anywhere, but they're usually not particularly good. But if you get a good one, a lawyer will typically charge you really quite a lot for that. So you get quite a few £1,000s for that, and that's something we've actually gone off and created ourselves with a very prestigious global law firm called CMS Law to make sure we can provide that for all our clients. So that's included in everything. That's no additional cost or anything else like that, and basically allows the protection of the shareholders involved in there. So I think shareholders agreements and directors' loans, very important. I think when considering company setup as well, this is a really simple point, but registered offices. People will go ahead and just put their own address down. And then suddenly they're getting spam after spam after spam coming through their letterbox. The issue essentially with having your own property address as the registered office for the company is that it's publicly available. Anybody can go on Company's House and see that Tracy Hanbury lives in 123 XYZ Road. Generally speaking, it's probably more of a nuisance, but there is a potential security threat there. Somebody find out where you live, and it's usually very, very hard to figure that out.
Had that personally happen when my accountant made a mistake of putting my home address in.
Oh, really? Exactly, and it can be a real nuisance, and so it's important to find a provider who provides a registered office service. And so typically they cost sort of £10-15 a month generally. But that's something we've also incorporated into our service. So we are the registered office for the company, and so that's included in that £20 a month. There's no additional fees for anything like that. And what we will essentially do is all company-related documentation, everything that comes through will come to us. We will then open it, and then we'll scan it into the client's account. So they could be based in Malaysia, but they don't have to have it sent to Malaysia. It's just sent to us, uploaded to their account, and they can download it and everything else like that. So I think they're three uber important elements of it. A business account, as we said before, is a huge one, so you can't get a mortgage without them, and lenders are very sticky on what they'll allow and what they won't. It sounds really easy to just go and set up an account. It's not the same as a personal account. I know of people waiting months and months and months to set up business accounts, and it's even more of a problem for those based overseas. Often you'll have to come to the UK, you'll have to have interviews and things like that. And so that's something that can be tricky, but is uber important, both for lending and just for managing company finances in general. Having your own personal account and then having 6 properties flow into it isn't ideal at all. So I think they're 4 really good and important considerations to have there.
Okay, brilliant. So just to recap on that, so it's obviously registering the business, the director loan side of things, obviously the registered office address as well, and the 4th thing,
it's a shareholders agreement.
The shareholders agreement. So that's 4 really good key points.
So they're beyond the basic points. So when you are setting up a company, be it with us or if you go off and do it on Company's House, there are obviously memorandums of association, things like that. It's important to get them because Company's House will give you generic ones, but again, that term generic gives generic. You want to make sure they're tailor built for buy-to-let investments. So even with us, all the articles of association are specifically drawn up for buy-to-let investing as well, and so people need to realize that this is a long-term thing. You're not getting into property for a year or two, and you got to get things right at the start because it can be very difficult to change later on. So.
No, fantastic. That's really 4 great key points. I mean, on to the next thing, which is always the next important thing, finance. So how can GetGround help with obtaining finance for your clients?
Yeah. In many ways. So fortunately, we've so with a lot of the broker partners we partnered with already, we basically have a diverse panel of people that we can send both our clients to and other people. So it's the biggest request we have. It's great, we've made a decision, limited company routes for us, but we need help with financing. Can you help? And so we've got 2 options essentially. So we have our own in-house financing division. So we've got relationships directly with lenders themselves. We've been very fortunate recently to have some exclusive mortgage deals exclusively for GetGround customers. So GetGround customers using GetGround SPVs still have access to some of the lowest rates in the market. So we recently had an exclusive deal with Mola, who basically in real terms, I think it was the lowest interest rate in the entire market. And it was exclusively for GetGround SPVs, and so that was certainly an avenue. And then we've got relationships with a number of other lenders as well, where we can refer directly to them. In a situation where a client either can't go with any of those lenders or isn't interested or whatever, then we have a very extensive broker network that we can refer them to. And something we've been very keen to do is, brokers. I love speaking to brokers, but some of them could be get a bit carried away, and they claim to have access to the whole of the market, and actually they have relationships with one or two lenders. To kind of mitigate that, what we've done is worked with a variety of brokerages so that there's basically financing options for all. So our client base of sort of 5,000 plus investors now is very diverse. It's everything from your UK first-time landlord based in London to a portfolio landlord based in Nigeria. And the financing options that are available to them are very, very different. So we want to basically have a broker network that can work with everyone and anyone. So if we have a person based in a challenging country from sort of financing purposes, we have people for that. The interest rates are of course high, but they will be able to assist there. We have people who can do first-time buyers. But basically every situation that a client could be in, we have options for that. And so that's something we've been very keen to address, because the reality is if you can't get finance, you can't purchase.
Of course, yeah.
Or by and large, or you have to do a cash purchase, which can really affect your strategy.
I mean, obviously the financings, obviously COVID slowed things down quite a bit, didn't it, in terms of backlog? How are you finding that?
It was a pain for a couple of months there. There was some teething points there. And I mean that was always going to happen, because I think what happened during that period is a lot of lenders, because of, I suppose, general fear of the market and market conditions, dropped out and ceased lending. So your lenders who did lend on limited companies became less numerous. Yeah. And so you had this funnel going from everybody coming into kind of this group here to the group is now this, and everybody's flowing into this. And remember, property investments spiked during COVID as well, because people were trying to get involved and diversify their asset base. And so you have this funnel which has all these requests coming through. And interest rates weren't as great as they are now then as well, because, the supply and demand, they could increase the interest rates because there was all this demand and only XYZ lenders who could lend. And so there was a bit of a backlog. It wasn't ideal, but I feel that's completely gone now. I haven't seen it for quite some time. Interest rates are coming further and further down. I know that is often a concern of people is, but are the interest rates not, precisely, precisely. But people's concern around interest rates and, them being slightly higher in limited company than they are personal name. I think there's a lot of misconceptions there. People often see an offer online for a personal name one-on-one for a limited company, and they say, oh great, no, I want to go personal name because the interest rate's better. But actually, that really attractive low interest rate typically only applies to very unique situations. It's why brokers are really important to gauge what you can actually access, because generally speaking, you don't know what you can actually access because the lending conditions on them. And so, we've seen interest rates drop and drop and drop. I think the 5-year fixed exclusively we had with Molo, I think that was about 3.1%, which was very low for a limited company one. And they will come down further and further. I mean, but banks charge those rates at the minute because they can. But there will be a race to the bottom, and we're already seeing that. And because of personal guarantees and things like that, it's not a more risky investment to lend to a limited company that is to an individual, because the personal guarantee is there. And so those rates will come further and further down. And 60 to 70% of buy-to-let mortgages last year were done in limited company name anyway. So it's inevitable they will drop and drop and drop.
Yeah, of course. No, yeah. Again, all makes perfect sense. I mean, what we actually did is when we sort of doing landlord investor hours, we generally put a couple of questions out to our database. Say that we've got these guys coming and see us, and just ask for a couple of questions really back. So I've got a question here from Nicola Wright, who is based in London, and Nicola has asked whether or not to buy using a limited company has been one of the hottest topics in real estate sector for the last few years. What do you find are some of the biggest misconceptions?
I mean, I think the one that I just tailed off with them would be the biggest one. Okay. That financing is hard. It's not, is the truth. I think the reason that misconception is there is because there's a lag in people's understanding. So when companies became this really hot, attractive route for people to go 5 or 6 years ago, that was the case. The financing options weren't great. You were generally leaning on commercial loan markets. And that there weren't that many limited company options available. And so, but as that demand has increased, banks have responded to market demand, and they've created lots and lots of hybrid products, which are essentially what we know as limited company mortgage products now, which are somewhere between a personal name mortgage and a commercial name mortgage. They're kind of in that middle ground there. And so I mean, there's hundreds of them now. I think 400 or 500 different limited company mortgage products at the moment. I mean, a lot of those are just for the UK, but there's also lots for international investors as well. And the belief that those rates are extremely high. They did used to be high, it's completely true. But again, as that market demand has increased, banks have begun this race to the bottom, essentially, and they are in competition with each other. And so rates are falling. I'm seeing rates as low as kind of 2.6% now for 2-year fixed, and that they will continue to fall. I've seen LTVs of up to 80% becoming a lot more common. People getting 75% LTV very, very easily. I would say the majority of our client base has probably got 75% LTV limited company mortgages, with a lot of people thinking, oh, you can only get, say, 60%. It's usually not the case. And so I think that's one of the biggest misconceptions is financing. That point you said at the start about, is it for me if I only have 1 or 2 properties? I think if you're going with more traditional providers, sometimes that is a consideration because they can be very expensive. The typical cost of running a limited company in the UK with kind of providers similar to ourselves and with the services similar to ourselves is sort of £1,700, £1,800 plus per year. And that can be very expensive if you have 1 or 2 properties, and can really put people off. But because we've made it cost effective now to own in a limited company and £20 a month, and that's available from the start, essentially. So that's definitely a consideration to have. I think people also are of the belief that you need to be very, very wealthy for it. I've never quite understood this one, but the tax rules apply to everyone, regardless of their income. So yes, if you're a 45% tax rate payer earning £200,000 a year, yes, it's very beneficial for you, but it's still beneficial for you if you're a £50,000 a year earner, or if you're even on a base rate earner, because the benefits of company ownership are very diverse, and it depends entirely what you want to do. So a lot of people who are basic rate earners will say, well, actually, I'm not interested in it.
Yeah,
but in their situation, it might not be the case that it's great for them. However, what's their plan? Well, if it's inheritance, this sort of tax mitigation and passing your properties on to kids, well, actually, it might be. And if you're not looking to draw on that money till retirement anyway, that's another option as well. And so people really need to do a bit of a deep dive on it, and so it's what we're trying to do. So we've got a rather large team of consultants now who are basically trained up to help people understand that. So instead of paying £1,000 for tax advice, which people should do, but they never do. It's one people need to get tax advice. It's true. We can give people a general idea about the situation, and we can educate them. So we will never advise people on what route to go, but we will give them enough and as much detailed information as possible to help them make that decision themselves. Again, they should go off and do it, but because they often don't, I think we're quite a handy service because it's amazing how people do this. You're investing in a £500,000 property and you won't pay £600 for tax advices. Yeah. It's very silly. Yeah. And something I would recommend all people do, but we can give them that initial information to help them see, okay, well, you're interested in inheritance, or you've got your kids here, or you're on a help to buy loan. You might be a basic rate payer, but your help to buy scheme might not allow you to purchase in your personal name. Well, an option could be a limited company. It's worth looking into their own situation there and the scheme they're on and everything like that. So yeah, I think that's definitely one of the big misconceptions. I think that it's hard to take the route can be. So you have this weird mix that there are some people who think it's really easy to set up a limited company, and it is. You can go to a company's house. But as I said before, it's important. The structuring is the core of it. Setting up is easy, structuring is the core of it, and that's the hard part. And then you have people who think, oh, it's really hard to set up a company. It sounds like a big thing to a lot of people to set up a company. If you throw the word company out to somebody, a lot of people think, well, that's a bank or Goldman Sachs or whoever it is, or Costa. Or, I don't know why I keep drawing on those two. But
Mr. Costa lives around the corner from me, actually. The original Mr. Costa before he sold it. Yeah.
Brilliant. But then, yeah, you have this group who think it's really complex. Oh, it's such a big thing to set up a company. I mean, the way I always describe it to partners and then to clients sometimes is, just think of it as a box around your property. Yeah. It's this invisible box that sits around your property and allows you to do things much more efficiently and gives you a number of advantages. Yes, setup and structuring things right can be quite hard and costly, but we've removed that. That's the whole point. So we're taking on that legal workload and all the sort of pain points there and the actual structure in there and looking after them for them. So we're trying to make it really, really simple. So the actual client, if they're going through the limited company route with us, it takes them 15 minutes online. All they need, and they can be anywhere in the world, so when they're doing that, so all they need is a copy of their passport, a copy of their proof of address, a selfie to do the facial recognition, and then details of the property they're buying. And then we go off and create all the legal documents and structure things off the back of that. And then they can ask us any more questions off the back of that as well. But it can be really simple to do, and that's what we're trying to do, is make it as easy and then cost effective as possible for people to take.
Yeah, fantastic. I mean, as you say, it's a limited company. It's there to help protect you and effectively grow what is going to be, what is a business. Okay. Another question that I've got is from Alex Brown, who's based up in Liverpool. Alex is looking for first-time investment property. He's got around £100,000 to play with, and he's asking, do you have any tips for great UK sort of investment areas at the moment, Liam?
So he's based in Liverpool.
He is in Liverpool, yeah.
We were having this conversation before, but believe it or not, I am from Liverpool. The accent might not give it away too much. I've been around the block to a number of places and don't quite have the traditional Scouse tone as much as I wish I did. I'm very envious of some of my friends, but I mean, I would say Liverpool as a whole is just tremendous. So I'm biased being from there, and I fall more in love with Liverpool as I go. But what Liverpool has as a regional city, and I think this actually applies to most northern cities at the minute, and possibly even places like Bristol. I don't know the Bristol real estate market too well. I did go to university there, but Birmingham, Bristol, regional cities, I think that they're just the place to be for the next few years. And the reason for that is, I mean, there's a lot of market data that shows that regardless, but from my own personal outlook, COVID's really changed people's outlook on life and living and jobs. And so I went, during COVID, I actually went back to Liverpool for the best part of the year, and sort of fell in love with it again, and everybody worked well from home. There was no issues. Yeah. And London suddenly became a bit irrelevant. Now I love London. It's one for me. Just look at the backdrop there. We've got a warship outside the building. We've got Tower Bridge there. It's a pretty good spot. It is a wonderful spot, but it's no secret that it's unfathomably expensive to live here. And I think people in general have realised this, and it's got to a rather ridiculous point where it's forcing people further and further afield. And COVID's basically, speaking as myself, London was where the jobs are. So I came to London for work. And London now is not necessary for jobs. You can do them from anywhere, or you can commute 1 or 2 days a week. And so regional cities like Liverpool, Manchester, I mean, they have these beautiful lifestyle. You get a really nice house that you can live in or rent or whatever it might be for very, very good price. Green space, nice life, culture. I mean, London, I always say, it is great, but it just has 30 of what other cities have. Liverpool has lots of Japanese restaurants. Yeah. London just has 30 times more. Has lots of parks. London just has 30 times more. So, and you don't necessarily need 30 times more. I think people have cottoned on to this, and I mean, I'm only 25, and a lot of my friends who have similar age are already kind of semi-giving up on London. They want to go to Liverpool's and Manchester, and Newcastle and Birmingham, because they can get lots more for their money there, and they can work from there. And the good thing is with your likes of HS2 and HS3 kicking off, I think HS is supposed to be done semi-soon. We've been told for years, but then HS3 as well, linking up the north. Being able to travel is going to be a huge thing. So, I mean, the term people keep talking about is, 3 days in the office, 2 days from home, or vice versa, 3 days at home, 2 days in the office. If that really does become the way people work, and I suppose, the jury's still out on that, there's no reason you can't come to London for 2 days a week. London to Liverpool, and I've done that trip so many times on the West Coast main lines. It's an hour 57.
Is it really?
Yeah, it's super quick, and it's not as obscenely as expensive as you would think. And so if you imagine, you spend Monday, Tuesday working from home, and then you get the train up Wednesday morning, you work here, you have your meetings, stay overnight in some budget thing or whatever's been created by that. That's another real estate opportunity. Those kind of short stay one night things for businessmen, a bit like in Japan. Work there on the Thursday and then come back Thursday night and work from home Friday. Yeah. I can see that becoming a very, very common model for every city in the UK. Because the one beauty about the UK is, as much as we're very overpopulated, it's very small geographically. Nowhere's really that far. Manchester's 2 hours and a bit. Liverpool's 2 hours. Birmingham is an hour. Very, Bristol's an hour 47, and it is. And you can do that. Yeah. And so trends-wise, I mean, we see Liverpool would be the biggest one I see come up on our platform every day. So we see a flow of all the properties being purchased onto the platform into SPVs every day. And it's Liverpool, Manchester, a couple in Birmingham. People are still buying in London. I wouldn't say give up on London at all. I think it is still going to come back in a variety of ways, but not in the ways that we've seen for the last couple of years.
Could be a lot more commercial to residential.
Well, this is what we discussed before. Exactly.
Absolutely.
If
you look at all these,
you're kind of high value properties down here. What's going to happen? They can't stay vacant. They won't stay vacant. So. It'll be interesting to see what happens though. But I still have a lot of faith in sort of regional cities, but both for yield and capital growth. So in the past, people were so obsessed with Liverpool, especially for great yields. You could buy £200,000 property, HMO, and you could get best part of £2,000 a month out of it. Not only are you going to get the yield, but because more and more people are coming back to Liverpool and Manchester and places like that, as populations grow and the demand rises, and so your capital growth is going to rise as well. And the more you have, especially professionals, sort of moving back to those cities, and I don't know, your accountants, PwC or something like that, basing themselves out of Manchester instead of London, that they're going to drive up prices essentially. So I think you're going to get both your capital growth and your yields up there.
Okay, brilliant. So I think that was Alex that asked that question. So I hope that answers that for you, Alex. And I think, obviously, the key sort of cities, Liverpool, 100%. Certainly Birmingham and certainly Manchester is what we're sort of getting a lot of feedback on now, and I think maybe what could be the way it goes is the professional HMO for London. So all of these sort of spaces,
exactly,
where you're kind of going in and maybe renting a room, and that's
syndicate ownership almost, or syndicate renting, where maybe that's you and five
maybe that's a business right there.
It is. I think it really is. I mean, I think the model that they have in Tokyo, I'm not sure quite agree on the actual physical infrastructure of it, but these kind of, I forget what they're called, but these almost cubby holes where you turn up late at night, you jump in, it's literally a bed with a thing, you've got a little TV screen there, you get out, shower in the morning, you go back to work.
And off you go.
Which is all you need for that night. If you're doing it one night a week, it's worth, having a nice £500,000 home in Liverpool or Manchester than, a £500,000 bed.
One night a week is fine.
London,
you can cope with that.
You can make it.
Absolutely. And you've got 2 days at home working from home. So,
precisely,
No, that's great advice. I mean, been really, really, really good talking to you today. If you sort of just give us a little roundup, Liam, on terms of, the USPs, your unique selling points for Get Ground services, and just a little snapshot really of what those USPs are, please.
Yeah, so I think that the big one being the education associated with it. So the limited companies are still confusing. Investment structuring in general is confusing. In fact, property can be confusing. That's why we have property education companies.
Yeah.
The reality is, even established landlords, you need to always be learning, and that's something. There's many of our clients have 10 properties already, and then we'll tell them something new, and they'll be like, "Okay, great. Oh wow, I didn't know that. Okay, that's really interesting structure. And I want to leave it to the kids in this way." And so, education is a huge part of what we do. Again, you should always be getting tax advice, but we're a great place to at least begin your understanding of things. Extremely cost effective. So as I said, we charge £20 per month to look after the entire financial administration of your company, which is I'm yet to see anybody else in the market who can do it even close to that. And so that encompasses everything from the financial administration, the accountancy, the bookkeeping, the registered office, everything under that. And it's all under one roof. We're trying to make it as simple as possible. So the actual journey from your going on or being intro to a consultant to your company and everything being set up can be as little as 2 days. So we've had people referred. We dig into their situation. They decide that's where they want to go. They get set up on the platform. It takes them 15 minutes. Because of the government funding we've had through HM Land Registry, we've actually managed to incorporate our own platform and our own technology directly with Companies House API and directly with HMRC's API, so we can do things very, very quickly. And so the company's kind of set up generally within 24 hours.
Okay.
The legal documents are there for you to sign, and you can essentially complete into that company the day after. And then everything's looked after from there on out. And if you want your financing options, you know where to come. We will constantly have more and more exclusives at the bottom of the market. Like I say, the 3.1% for a 5-year fixed with Molo that we had before was, I think, in real terms, the lowest in the entire market. And that was exclusive for Get Ground members. So I think that's a very important USP. Just from a general organizational standpoint, so there's so many different softwares out there and everything, but we're trying to make it super easy to understand your portfolio. And so we basically split out each property into its own SPV on the platform so that people can not just understand the macro of their company and see, we've got one big cash flow coming in, one big cash flow coming out. They can understand at an individual level. So they can understand, each cash flow going into each property. What do I need to change here? Every year I can see my financial statements and everything for not just the entire portfolio, but individually. And I can make a decision to change property management agents. This guy's ripping me off. Or, I need to refinance it. That's a really high interest rate, whatever it is. And it removes that kind of confusion. And, the property as a whole is quite archaic. It's quite backwards compared to other financial markets. So if you think of your traditional kind of investment, stocks and shares and things like that. Financial markets are light years ahead in terms of efficiency and doing things in the best way possible than property. Everything's very manual. Just look at conveyancing solicitors.
Yeah.
It's obscenely long amount of time to do what are realistically simple operations. And so we're trying to just make it as efficient as possible so that people can buy and sell much more easily. People can understand their portfolio better. They can do it cost effectively. They can ensure that they're actually making the most out of their investments and they're not losing thousands and thousands a year in unnecessary costs and unnecessary taxes. And just increase general efficiency in the property industry in the UK.
Fantastic. Okay, so those are some great unique selling points, from sourcing to setting up to financing to your tax worries. It really is a whole solution that you offer. So one more question, Liam, before we kind of wrap this up. So is there any introductory offers, or is there any sort of anything that you can offer our members, our subscribers today at the Landlord Investor Hour National Landlord Investment Show?
Yes, we do. So right now we actually have a deal on for that, which is essentially the actual setup fee of our company, of your company, for you to join the platform, has been reduced massively. So because of the extensive work we do in the background, we would usually charge a much higher fee. But currently we charge £99 excluding VAT to actually set up and structure the company, and so that's an exclusive deal for the next, I think it's the next month or so. And so if you are interested in that, please give us a shout. I'm sure you'll share my contact details and everything else like that, and how to get in touch with GetGround, and then we can book you in for consultations. Consultations are also all free for all Landlord Investment Show attendees. And we can see if we can help you out there.
Yeah, fantastic. I think what we'll do is we will set up a code that we will send to you guys. So obviously you can quote that code and be eligible for that £99 offer from GetGround at the moment. So yeah, I think, really great information. I think the most important now, Liam, is how do we get in touch? How does people get in touch with you? So if you'd like to just sort of tell our audience what your website address is and give them a little bit of direction of how to get in touch with you.
Excellent. So I assume this will also go up on the chat as well. But the website address is www.getground.co.uk. And my email address, I believe, will be posted as well. But for those of you watching right now, my email address is liam.rogan, so ROGAN, at getground.co.uk. And that's probably the best way to get in touch with us as well. But again, I'll provide you with my contact details as well. So anybody interested in that can come directly to us. We can get you booked in with one of the consultants and see how we can help there.
Okay, lovely. Thanks, Liam.
Great.
Also, look out, guys, for the next two sort of all our shows where GetGround will be exhibiting and will be available on the day to speak with you guys. So we'll share some information and look out for some information on the upcoming shows as well at the National Landlord Investment Show. But once again, Liam, thank you so much for joining me.
It's been a pleasure.
Oh, it's been great. And the sun has actually come out and it's dancing on the River Thames, which is lovely. So yeah, thanks ever so much for watching, guys. We really hope that you've enjoyed the chat that we've had today with GetGround and found it really useful. There's a fantastic offer there of £99 to join up, really with a no-brainer, no rocket science behind it. It's a very good offering. So please get in touch with Liam and his team, and we'll look forward to seeing you on the next edition of Landlord Investor Hour. Take care, guys.